Good morning. How are you guys doing? Nice to have you again. Back at it in the morning, 8 a.m. It is Tuesday, December 17th. Glad you could join me. And some pretty good moves happening in the markets. And some interesting data that came out just recently. The CFTC data was released, and I went through it and saw some interesting things, some big moves, especially right before Christmas. Interesting. We're usually told that leading up to Christmas there isn't a lot of action because a lot of people are going on holidays and stuff. Well, I'd beg to differ when you look at the data that was just released. There's seems to be a lot of interest, a lot of buying, a lot of selling taking place. So we're going to take a brief look at the positions held by the institutions, and we'll see how that is affecting the overall markets. All right. All right, my friends. Oh, somebody's hitting the like button. No, somebody's doing that. That's nice. I like that. I saw some hearts floating up. All right, so let's take a look here. So here's a brief snapshot here. Let me just reduce this. Here we go. Here's a brief snapshot of the positions held by the institutions as of December 10th, 2024. Let me bring my marker here, and what I like to focus on here is the change column. That gives me a quick insight as to what was the significant move that took place over the last previous week. And so you could see that right away I'm looking at 47,000 minus for US dollar Japanese yen. What does that tell me? It tells me the banks were making a bearish move in positions. Now that could be them reducing long positions or increasing shorts. Okay, so we'll dig a little bit deeper to see what is causing that. USCAD bullish, extremely bullish, and if you look at the charts, you'll see that they're pushing price up and up and up, and they're just not stopping. So we'll look at what their positions are and see how close they are to reaching maximum size, because we know when they reach maximum size, they tend to take profits on their positions. All right, so USCAD very bullish. Aussie, some bearishness. We've been expecting bearishness on Aussie, even though we have significant demand that's come into play. Also, the euro US dollar, some bearishness, a little bit opposite of what we're seeing with the pound, with a plus 20,000. So that's bullish. And down below we have S&P 500 bullish with the plus 52,000. And then we have bonds bullish with the plus positive 39,000. Okay, so that's a brief summary of what they were doing with their positions. Okay, now let's dig a little bit deeper and take a look at what those positions look like. US CAD, right? So let's start with US CAD. US CAD, they increased their long positions from 181,000 to 210. Now, if you look at the column here under max, you'll see that the max size, the largest position that they've ever had in longs, was 219,000. Okay, we're at 210, so we're nearing maximum size for the institutions, which means typically when they reach this amount, they're going to start taking profits on long positions. Okay, so let's take a look at the US CAD. Okay, so as you can see, they were rallying price up. Remember on the daily chart, we had this area of demand. I said, for price to go down, this demand zone needs to be removed. Okay, this demand zone needs to be removed for price to go down. Why did I say that demand zone? Because we located that demand zone as being the very important demand zone that would play out the dynamic of what was happening on the charts here. And so as you can see, that demand zone was not removed, and instead it was used to fulfill this price action to the upside. Okay. So now we have price up at the highs. It looks like it's about to remove this area of supply that we have. Let's see. Yeah, looks like it's just about to remove it. It hasn't yet removed it, but it's on the cusp of doing that. And as that is all taking place, let's look at retail positions. Have they finally decided to offload their positions? Last we checked, they were holding at 92% of them at 15K, and today we have 93% at 16K. They're increasing. Wow. Wow. So let's put that there. 93 at 16.5K. So they've increased at 16.5K. So they're double downing. As price is increasing, they're double downing on their shorts. Well, if they continue to hold, there's a good chance that price will eventually drop here. Let's see. Let's take that out. And this supply here, let's take a look at that supply zone. Yeah, that's good, 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 good. Yeah. Yeah, we have supply, but it's way up there. Once they remove this supply zone on the monthly time frame, it can go up a little bit higher. I wouldn't be surprised if they surpass this this amount here, 210, and go even greater than that. I wouldn't be surprised of it. Okay, because you know, the dynamic of what's taking place, they're about to remove a major institutional supply area. So when they do that, they are coming in with significant demand. And we can see that significant demand because it's putting long positions near their maximum size. I think they're likely going to surpass the maximum size. And then they're going to take profits, retrace price back to the core of the buying, lower here on the charts, and then they'll continue price higher. I was just talking to a family member about this, and it looks like we're going to go to $1.50. That's where I see things eventually heading towards. There was a good chance that price was gonna drop, but again, it came down to this this key zone here that didn't break, and when it didn't break, that was signaling to us the banks wanted to buy. So now that they're buying, we're going to be focusing on that, and $1.50 is likely the very long-term target for us. Okay, high odds target. All right. So what was one of the other ones? So USCAD was one of the big ones. Euro US dollar was bearish. We see some bearishness. So let's go and take a look and put things into context here. Why bearish? Why was there a bearish change? It was bearish because they took profits on some longs. Okay, so they reduced longs from 167 down to 157, and they increased shorts from 225 to 232. Now, 232, it's aggressive, but all-time maximum size for shorts is 271. So there's still room for that for a move to take place. Looking at the charts, we see a rally up into supply. Price contacted that supply here on the daily chart and used it to facilitate a move to the downside. But as you can see, price is not really doing much here, right? It's sticking within a range. It's not like it hit that supply and then brought price down and closed below the previous close down here. We're not seeing anything like that. You look at the monthly time frame, you can see it's creating a basing candle. Now, basing for what? A retracement up or for a continued move to the downside? Well, to be able to determine that, we'll have to look at the ranges here on the lower time frame and see what wants to break. Personally, what I'm seeing here on the 4-hour chart is we have supply here and we have demand here. Demand breaks, we likely head much lower. Okay. Supply breaks and retracements up towards supply up above. That's how I see things. Okay. In terms of positions, We see them increasing shorts. So shorts are the bias right now. We see that into net positions, we can see that shift from bullish to bearishness, and it's been increasing, a steady increase, okay? When you combine both non-commercial and commercial positions, you can see that it's pretty aggressive. Minus 130K is the difference between non-commercial and commercials. So that's pretty bearish. So we have a bearish bias on this one. We're just waiting to see what direction it's going to break out of for us to put ourselves into a trade, okay? So Euro was one that I wanted to look at. US dollar, Japanese yen, we see bearish here, okay? So we go over to the data. What's causing it to be bearish? Well, an increase in short positions and a decrease in long positions, okay? So let's go over to the US dollar, Japanese yen. And we've been tracking this one very nicely for some time here. First things first, price rallied up, contacted major supply. We forecasted a big drop coming, and it took place. Contacted demand, we forecasted a big move up, and it took place. Contacted supply, we forecasted a move down, and it took place. Contacted demand, we forecasted a move up, and it took place, okay? Every single move that we had forecasted came to fruition, and we took some trades and profited on the way. The last piece of analysis I gave my members was this chart on the 4-hour. I said they're accumulating right here, and they're going to distribute right here. That is my prediction, okay? And so far you could see they rallied price out of here. They removed an obstacle. They created demand on the chart, and they've been using that to facilitate a move higher. Now, yes, right now we're contacting some supply on the daily time frame, so there is the chance that we're going to see some pressure to the downside short term, but I still think that there's more upside on this one. So bearishness, yeah, why was it bearish? Well, because we're looking at December 10, right? So bearishness, as price is coming down towards December 10, look what's happening with price, okay? As it's approaching December 10th, what's happening with price? It's moving downwards. So it makes complete sense that they would be reducing long positions and increasing shorts, okay? I think in the next few weeks, what we're going to see is an increase in long positions again. All right, so that's US dollar, Japanese yen. What were the other big movers? Gold, not so much. It's just sitting up there after it responded to some supply. S&P 500 bullish and bonds bullish. Let's look at the S&P 500 real quick. All right, so here we have S&P 500. We have trends to the upside on all the time frames, and on the daily time frame, this is what we had. We had a supply area being created. Price dropped, rallied back up, contacted that supply, a second contact. Now we had contracts expire right here, okay? So the old contract closes, new contracts opening, and there is a discrepancy in price. So for the continued contract, it shows price as up here as opposed to down here. Now, if you take a look at, the SPY, for instance, you'll see that these highs here have not been surpassed, and price is looking to gap lower. So supply is holding. But an interesting thing that I've noticed about price action, when we look at historical charts and we're looking at those times that futures contracts expired and they moved on to the next contract, gap ups, gaps that we've had, we play them as if they're gaps, okay? Even though it's a discrepancy in price, we leave our analysis alone and we continue to use our analysis based on those gaps being real gaps, okay? For instance here, perfect example, we had price here, it gapped up from the new contract, price retraced to the area of buying and continued, all right? Nothing changed. One very interesting one here that I'll show you is this one here. Right here we had contracts expire. This was the demand area, and when the new contract started, it opened up here, and the demand zone moved up with it. Okay, right there. And what ended up happening? That was the area where the demand zone was actually supposed to be, even though the candles are not in there. That's where the demand zone is. So I left it there. It played a crucial role in how price ended up playing out. Okay, and here again, here's an important one. Here's a contract expiration. Okay, here was a supply area. Price came down, rallied up into a supply area. Now, with supply being in play, the bias would be pressure to the downside. What ended up happening? Contracts expired, new contract opened. What happened? It gapped above the supply, created demand, rallied, contacted demand, demand again, and took off. Okay? So the gap up above a supply, in my analysis, tells me that supply is no longer in play and that we should be looking for a continued move to the upside. And this is exactly, this situation back here is exactly what is taking place right now. Because we had the supply being formed, price coming into it, and now we're gapping up above it. So now we watch to see how this will play out. But for me, this is extremely bullish. Okay. It's extremely bullish. All right, my friends. Look at Bitcoin. I'll do Bitcoin real quick. Bitcoin, we have an upside target here, which we shared with members and some of you as well. I'm expecting a reversal around 110,000. Okay. Because I believe the time frame that is in play is the monthly time frame, and based on the structure of the monthly time frame, 110 looks like it's going to be peaking out there before a significant drop. Okay, yeah, I wouldn't mind trading this, as I've mentioned to members before. I wouldn't mind trading it, but there's no way that I'd be buying Bitcoin up at these highs. Just no way. And if you're thinking, oh, but it's 110, it's going to continue, you shouldn't think like that. That's what amateurs think like, okay? If you think like, oh, it's 110, it's going to go higher, I'm going to miss out. If you think like that, you're going to be taken advantage of, all right? You're going to be taken advantage of. They're going to use your emotions against you. So gain some self-control and just let it do what it wants to do. It's going to come back. You got to have faith that it will, because it just will, okay? At some point, it'll come back. And when it comes back, you're going to be thinking, thank God I didn't buy when it was at 410. Wait for it to come back. It'll come back. And when it does, you find the institutional buying areas and you buy it at that, okay? I already told you the institutional buying area here. Okay, I did all the hard work for you. I wouldn't buy Bitcoin unless it came down to the 60s. Period. And you can say, oh, but it'll never get down there. You know, that's what they said when it was up here at 60K. And I was forecasting it coming down to 12,000. They said it would never happen. Well, it went to 16, okay? I missed it by 4K, but it did. All right, folks, that's it. I hope you enjoyed it. And let's leave you out with a little bit of Christmas music. Been playing Christmas music in my house for the last, I don't know, 3 weeks. I can't get enough of it. I love Christmas music. And I know, crazy, all that stuff, but I love it. All right, folks, there it is, there it is. Beautiful. Can you hear that? There we go. All right, folks. Thank you for joining. You take care of yourself, and we'll talk to you soon. Have a good one.